I want you to imagine yourself as a little rabbit running around through a jungle, the jungle of trying to learn Forex trading. It's a maze. It gets dark at night. Predators come out. Everything's trying to get you. You're trying to find the answer. You're trying to find your way. You're trying to make it. Really, you're just trying to make it out alive, which is just breaking even in trading. And then in the midst of all of this, you come across this Wyckoff schematic distribution institutional strategy. You come across Wagyu beef, smart money concept, fair value gap, accumulation, volume profile. You come across all this crazy stuff, and you're trying to get a 1 to 5,000 risk to reward ratio with a 90% win rate every damn trade. You have 2 pip stop loss. Stop loss is smaller than the spread because you're just that good. It just goes instantly into profit. And needless to say, you're frustrated. I was in the same position when I started trading in 2016. I've been there. I've been through all the ups and downs. I know what it's like to be searching desperately. You get to the end of a trading week, you have no clue what you did, whether you ended in profit or loss. You don't know why you ended in profit or loss. And you spend the whole weekend watching trading videos like this one, trying to figure this shit out. I understand you. Listen, here in this video, I'm going to show you you don't have to do all that. I'm going to show you with evidence that I've been doing this exact same thing for over 6 years, and it's been working for me completely profitably with proof. And here's the proof. Let me show you the proof. I can speak to this because I specifically have been calling all my trades live, my trades and analysis live in my free Telegram channel for free for over half a decade, since 2018. If you literally want to follow this Telegram channel where I literally share all my trades, there's 57,000 people in there right now. You can go to my website, which is the first link in the description of this video. Click it. It takes you here to my website. Then just click my free Telegram channel. Once you click view in Telegram, you're in. You could literally follow all my trades, my analysis, literally everything I post in there for as long as you want. Just yesterday, the trades that I shared in here, I had 2 trades, one on GU, one on EA. I had a 50% win rate, meaning I won GU, and then I didn't technically lose Euro AUD, but I broke even on it, which I consider that not a winning trade. So even my losses are sometimes break even. That's just how great I am at trading. I'm just kidding. But yesterday I had a 50% win rate, and you'll see that it's pretty much like that most days. If we go back to the day before, we could see this was my trades the day before. I had 2 setups. I had USD CAD, Euro AUD, and GBP USD, so 3 setups. And you could see for Euro AUD, I roughly broke even on it. USD CAD, I roughly broke even on it. And GBP USD, I roughly broke even on it. So in this case, I had some losses and I had some wins, and it came out to roughly break even on the day since I risk $5,000 per trade. Anything under 1 unit of risk, whether I make less than 5K or lose less than 5K, I just call it a break even day, and it is what it is. So you can literally follow all my trades and analysis right now by clicking the first link in the description, head into my free Telegram channel, clicking join, and you're in. You could be in there in the next 10 seconds, like looking at everything. Just so that you know that I'm not someone that's full of shit making all this shit up. I've been proving every single day because I've actually been backing up the shit that I'm saying with live, real results every day for over half a decade. That's the proof. Now, here's the actual pudding, because the proof is in the pudding, as they say, right? Here are some objectively true statistics from my trading over the past couple months. You can go and verify this for yourself because I've called it all live in Telegram. Again, I have about a 50% win rate, meaning my win rate is no better than random chance. Whenever I trade and I think that price is going to go up or down to a final outcome, like a profit target or invalidation stop loss area, I'm about right half the time. Every now and then I take losing streaks of a couple trades in a row where I'm wrong like 3-4 times in a row. And every now and then I take sweet winning streaks where every time 2, 3, 4, 5 times in a row even, I'm just right back to back. A couple weeks ago, I had a week where I got 8R profit. So I won 8 units of risk. My unit of risk is $5,000. 8 times 5 is $40,000. I made $40,000 that week, roughly, pre-commission, just because I had a huge win streak. I won literally every single trade. I think the only trade I lost was like $1,000. And I think it was like, that's pretty much a break-even trade. They're randomly distributed whenever you have win streaks and losing streaks, but it still comes out to about 50-50 win rate. So you may be asking yourself, This guy claims to make millions of dollars trading with the 50-50 win rate. How is it that only being right half the time can generate that type of money? You've probably already figured this out for yourself, but if you haven't, let me tell you. And if you already know this, let me just reinstate it to just hypothetically, figuratively pound this into your brain because it's true. My average loss is less than my average win. That's how simple it is. If when you win half the time, make a little bit more money than when you lose half the time. If you start with a $100 bet and you're risking $100, on that $100 risk, if you can lose only $100 on your losing trades, and then in your winning trades you make like $130 or $150, you have a profitable system, my friend. So what I've done over these years is, even with only being right half the time, I just make a little bit more on my winners than I lose on my losers, and that's the only reason I'm profitable. I do this through losing streaks and through winning streaks, and a big portion of getting this right is sizing your trades appropriately. I've done the whole 1% of the account risk thing. In my opinion, it just takes longer for the accounts to grow, and you don't have to do that low risk because you can just put a small starting balance and then you can just risk a large portion of that account. I personally, my risk comes out to be anywhere from 5 to 10% per basket of trades on one trading opportunity at a time. And while some people may consider this crazy, let's round it up to 10%, right? Let's just say max I'm willing to allocate to risk per trade is 10%. I have to lose 10 trades in a row to blow the account. Now, what's the likelihood of that? It's just not very likely. Will it happen at some point, and has it happened before? Yes. I've lost 5, 6, 7, 8, 9, 10 trades in a row before, and probably more than that. That happens. It just doesn't happen very often. What's more likely is I have a win, I have a loss, I have a win, I have a loss, I have 2 wins, I have 2 losses, 3 wins, 3 losses, and all of it's just randomly distributed. But since I just make more on average than I lose on average, whenever I'm right versus when I'm wrong, the account's overall profitable. The account that I've started, that I've been showing in Telegram, you can go see it if you're clicking this link below, going to the Telegram channel right now. You can see, if you're watching this video in the near future from when I'm uploading this video, I started an account at $100,000. It's up to $175,000 right now. And I do this by risking 5 to 10% per trade. Now, that $100,000 starting balance, it was like $99,800 or something. But so that starting balance was a small percentage of my total capital allocated to trade. I have my capital allocated to trade Forex, equities, a little bit sitting in crypto, and I distribute it pretty evenly. And so for my trading capital allocated to trade, that's just a small starting balance, and then my risk can be whatever I want. The risk percentage per trade doesn't matter that much when you're sizing your trades, in my opinion. The dollar amount risk is what matters. If you start a $100,000 account and you are not cool risking 10 grand on a single trade, you shouldn't be trading with that risk. If you're comfortable risking 1 grand on a trade, well, instead of putting $100,000 into the account, I'm just saying you might put only 10K into the account. Keep the $90,000 in your bank account and just put 10K with the broker. Then you can still risk 1K per trade, provided you have high enough leverage. A lot of regulated brokers won't give you that high leverage, so you'll have to deposit a little bit more. That's just the case. But what's important and what the takeaway is here is that I think if you focus on a dollar amount risk per trade, whether it's USD, Euro, AUD, Canadian dollar, whatever it is, just pick the dollar amount you're comfortable risking and then deposit like 10 times that dollar amount into the account. That means that you could take a 10 trade losing streak without blowing the account in most cases. And if you have lower leverage, maybe multiply it by 20. So if you want to risk 1K per trade and you're using like 1 to 50 leverage, we'll just deposit like 20K into the account. Like it's no big deal. 20K into the account, right? If you don't have that much money, it's okay. Size this down based on your risk tolerance. If you have 2K to trade with and you want to risk $100 per trade, put the 2K into the account, risk $100 per trade. That's what's important, because then when you run into losing streaks, you're probably not going to wipe out the account most of the time. Not financial advice. Trading's risky and most people lose money, and you're probably going to lose money listening to everything I say here in this video. 80 to 90% of people just lose. That's just the way that it is. Trading is hard. It's difficult. It takes a lot of time and experience. Now, with that being said, if these stats are true, it's a beautiful thing because it no longer means that you have to scour YouTube searching for all of this wild, crazy, complicated stuff. Here's what this means in practice. If we go here to this chart right here, and you get into a trade, let's just enter for some random reason, right? Let's say you think price is going to go down here to the next support level. Right? No technical analysis whatsoever. Just no indicators, no nothing. You just think, yeah, it's going in a downtrend. Maybe it'll go and touch that low. Okay, whatever. Great, top tier analysis. Here we go. So let's say you take a sell order. So you get into a short position right now. You put an invalidation or a stop loss. I call it invalidation because I don't trade with hard stops. So invalidation is the point from the entry to the point at which the trade becomes invalid. And it works the same as a stop loss because it's usually where I'll manage the trade by closing it or adding to it, or sometimes it kind of depends on the situation. But that's the point at which, hey, this trading idea is invalid. So if you enter a short position right there, let's take off this arrow. You can go to the minute 5 chart and lower time frames, right? You can start in the daily, the 4 hour, the 1 hour. You can use all the time frames to just help you craft the trading decision. And if you just enter randomly anywhere, here's what happens. This is going to go up, and 50% of the time when you enter randomly, it's going to hit your invalidation or stop loss. The other 50% of the time, it's just going to go straight to your profit target. Okay. Sometimes it'll range, do whatever. But what I'm saying is half the time it'll be right, half the time it'll be wrong if you just enter randomly with a 1-to-1 risk reward ratio. Now, what happens when you try to get a little bit more fancy here? What happens whenever you use logic like support and resistance? Support and resistance works really well as a risk structure, but it has zero predictive power. You're not going to predict where prices are going with any technical indicator, with any technical analysis, with any fundamental bias or anything like that. And if you can, prove it. Call your trades out for a year in a Telegram channel. Prove me wrong. That you can predict where the market's going to go more than 50% of the time with a 1-to-1 risk reward ratio for starting the trade outcome. If that does be the case for most people, and they can't predict where the hell price is going because you all suck at trading, myself included, what you can get fancy with, then you can say, hey, if price is going down, sure, I could enter a trade down here, as it's going, have my invalidation above here, have my target down here. But if I know that price is bouncing here at this resistance zone, and if it's going to go down, it's unlikely to break this resistance zone, I can just wait for price to come all the way up here into the resistance zone again. Then if I enter there, I can enter there. I can have a wider invalidation, right, above this recent high right there. And then above that recent high, if price breaks above it, you're going to start to be wrong. But it also gives you a very easy profit target, because if it happens to bounce here at this resistance zone and it just goes straight to the profit target, it barely has to get to the previous low. It doesn't even have to go all the way deep into the zone. It just has to get to the previous low. So you can get fancy and you can wait for entries that you think are better, that present good risk to reward. And I don't mean risk to reward in terms of like greater than a 1-to-1, though that's typically what ends up happening. What I mean is, from a risk structure, you have potentially less to lose than you have the potential to gain. So some people look at this in terms of risk reward. I'm going to show you why you can look at it in risk reward, but why it doesn't even matter. It's because if you get into a trade up here and you enter a sell, what'll happen is that if it starts going up against you, so say it goes into profit but makes a higher low, and then it just starts trickling upwards like this. In that case, you're free to do what's called trade management. You know what trade management is? It's where you just ask yourself, hey, do I think this shit's going to work out? And if the answer is no, you just close the trade. Same thing vice versa for profits. If price goes down here and starts bouncing there and going up, and then you think, okay, I don't think it's likely to hit my profit target, let me just close the trade in profit down there. That's trade management, just making a context-based decision to manage the trade, either with a profit or loss or adding to trades, this and that. So if you think price is no longer going to work out, guess what? You could just close the trade right there. And instead of you taking a full loss of, say you were risking $100 per trade, instead of this being a $100 loss, it ends up being like a $10 loss, plus spread, maybe commission, maybe $15, right? Certainly better than $100. Probably it's around break even for you. If you're risking $1,000, this ends up being a $200 loss. But if it goes into profit, which half the time it'll just go straight there, well, you just hold the trade to at least a profit target. And what's cool is that once you get more experience, after you've done this for a while, you've done the whole 1-to-1 risk reward thing, you're entering with either trends, or you're buying at support, selling at resistance with 1-to-1 risk reward ratios. You've watched it play out over and over for a couple weeks, couple months. You start to get a feeling of intuition as a result of your applied experience doing this over and over. And this skill set, this intuition that you can use it in terms of trade selection. You can use it to say, I think this trade's kind of stupid, so I'm not going to take it. Even though it technically makes sense and sets up, it feels weird. I'm not going to take it, right? You're only going to get that feeling with the experience. Then what you can start doing is you can start saying, you know what? I've entered this trade and it's going into profit. I think this trade is more likely to go to the final target. So you know what I'm going to do? Not only am I not going to take profits now and not exit or anything, but I'm going to add to this winning trade. So that way, if it goes to the profit target, you have 2 winning trades. So instead of making like 1 R of profit, you risk $100, you make $100. Instead of that, now you've risked $100 to make maybe $150 or $200 or something like that, right? Depending on where your final target is. Whenever you add to the winning trade as well, you can move your invalidations down. You can move your stop losses down so that if the trade screws up and it goes against you, you still only lose around 1 unit of your risk. If you risked $100, you still stand to lose around $100 if you tighten up your invalidation / stop loss areas. Now, sometimes this will exceed 1 R. Sometimes it'll be like 1.5 R. But here's the point. If you know what you're doing and you've gotten the experience and you have the intuition and the skill set to dictate using that intuition in your actual trading decisions, and you know that once a trade starts showing you evidence that it's going to work, it's more likely to work, you can add to it, and it's okay to assume the additional risk because you're betting more on a trade that is literally already showing you that it's starting to work out and that it's winning and that it's more likely to go to the final target area. It is this skill set of trading which a lot of people try to elude. They try to run away. They try to say, no, I want the black and white strategy where I buy the 10 moving average and 15 moving average crossover with a 1-to-3 risk to reward ratio. And I know the exact win rate and this and that, and everything's going to be fine and dandy. I'm sorry to tell you, but in most cases, that just doesn't work out. Even computer algorithms at quantitative hedge funds, like they have to continue optimizing them over time because even those lose their edge over time. You trying to use a black and white trading approach in which you say, I will do this, and everything will be okay. It undermines the whole concept of developing the skill set of trading. The skill set of trading allows you to get yourself into trades with maybe 10% technical analysis, right? Like you're like, I got to figure out where the hell I'm going to enter, and I got to figure out where I'm going to say it's wrong so that I can get out of the trade, and I got to figure out how much I'm going to risk whenever I am wrong, right? You still have to do all that stuff. That's the mechanical part of it. The other 90% people say is psychology, mental approach, your skill set, whatever the hell people spout, right? The other 90% is you sitting at the chart and making those context-based decisions based on the nuances of the approach. Some people do significantly less, like me, for example. Some people go through all these mental gymnastics and do all this shit. And, everything works in the right context. I'm just saying, since it's 50-50, if you just enter randomly, why not use technical analysis to your advantage? Because you can use it as a good risk structure. Meaning, if you enter at support, just put your stop loss under the support. It's an area where you could say, if price bounces here, I'll be right. And if it breaks here, I'll be wrong. It's just, that's all support resistance is good for. Don't try to use it to predict price. You're going to really be frustrated mentally. So if that is the case, with a 50% win rate, getting in with just 1-to-1 risk reward ratios, watching what happens for a couple weeks and a couple months, this gives you the skill set. This helps you develop that intuition where you can start selecting trades that you think are a little bit better. And also you can start managing trades in a more contextually appropriate way to position yourself in such a way where your winners end up being a little bit more than your losers on average. And that, my friend, is how you take a 50% win rate, make a little bit more when you're right and lose a little bit less than you're wrong, to make millions of dollars trading. Am I saying you're going to make millions of dollars trading? Explicitly, no, I'm not. Most of you will never make $1 million trading Forex or stocks or crypto or anything. Unless maybe you buy one of those crypto shit coins and it spikes up like 1,000% in like a month. Maybe you'll become a crypto millionaire, right? You could buy a green Lamborghini. We'll all cheer for you on Instagram. But for the 99.9% of you that are watching this video, it's probably not going to be the case. You're probably going to have to give 2% of a shit, sit down, start keeping things really, really simple, finding a good way to control risk and build your risk structure, like placing a stop loss below a support level that you enter. Gold star for you. It's not that complicated. You can find simple trades, you can control risk, then you build that experience up over time. Once you build that experience, the skill set really serves you. I believe the skill set is your edge. And you, my friend, can build a system that works for you, your time constraints, your capital, your psychology, your personality, everything. If you just sit down, take the time to learn, and learn through experience, watching the same things happen over and over and over again. I believe in keeping things simple and controlling risk because I believe it's the two most important things that people need to start transitioning towards profitability. I'm not guaranteeing you anything. All I'm saying is that it's worked for me for over half a decade. It's worked for the thousands of people that have learned from me in my free Telegram channel, here on my YouTube channel, as well on my paid products. And it might work for you with roughly a 90% failure rate. So for the 10% of you watching this that are actually going to take the time to give 2% of a shit and do all the work required to build the experience, it's a little bit more likely to work for you. With that being said, this is the end of the video. If you like this video, be sure to do whatever you want. And I'll see you in my Telegram channel. That first link in the description, and then click my Telegram channel button once you get to my website. Then boom, you're in the Telegram channel. You can be there in 10 seconds. I'll see you in my Telegram channel in 10 seconds, my friend. Cheers.